Hello friends, today we are going to see the subsidiary books. In that subsidiary books, we are going to cover the cash book. See, subsidiary books are the prime entry book in which the transactions of the particular categories are recorded. Or to save the time and energy, the transactions which are of similar characters are recorded in a separate book. That book we call it as a subsidiary books. There are four types of subsidiary books: cash journal, good journal, bill journal, and special journals. Cash journal. Cash journal is the book in which we record only cash receipt and cash payment transaction. Okay. There are three types of cash journals: single column, double column, and triple column, that we are going to see in next slide. Second type of subsidiary books is good journal. In good journal, we record the credit transaction. Okay. Goods journal record the purchase and sale of the goods related transactions which are on credit basis. Purchase journal, purchase return journal, sale journal, and sale return journals. In purchase journal and purchase return journal, we record the credit purchase. In purchase journal, we record credit purchase, and in purchase return, when the company returns that goods to the supplier, that we record in the purchase return journal. Then sale return journal and sale journal. In sale journal, we record the credit sale, and sale return journal record the goods which are returned by the customer to the company, that we record in a sale return journal. These are the four different types of goods journal in which we record the credit transaction. Bill journal, we also record the credit transactions, but in this bill journal, there is a promissory note maintained during that transaction. In bill receivable means the credit sale to the customers. In that transactions, promissory note is maintained, that we record in the bill receivable journals. And bill payable, that is a credit purchase related transactions, we record in the bill payable, but there is some promissory note is maintained during the transactions, that we record in a bill payable journal. The next type of subsidiary books is special journals. Those transactions which we cannot record in a cash journal, good journal, and bill journal, that we record in a special journals. For example, adjustment entries, rectification entries, we record in the special journals. Okay, this is all the types of subsidiary books. Now we are going to see the cash book or cash journal in detail. See, cash book or cash journals are the books in which we record the cash receipt and cash payment, okay, related transactions. It starts with the cash or bank balance at the beginning of the period, and this is used to record all the transactions relating to the cash receipt and cash payment. This is very popular journal which is maintained in all organizations. Also, this journal serve the purpose of both, that is journal as well as ledger. Since the transactions are recorded for first time in the cash book, it is also called as a prime entry book or original entry book. And when cash book is maintained, the transactions of cash, there is no need to record that separately in the journal. That's why it serves the purpose of journal as well as ledger. There are three different types of cash book. First is single column cash book, double column cash book, and three column cash book. Single column cash book, in this cash book there is only amount column. See, this is the pro forma of single column. There are two parts, that is debit and credit. On debit side, again there are four columns: date, particulars, ledger folio, and amount. On credit side, date, particular, ledger folio, and amount. On debit side, we record the receipt. On credit side, we record the payment. Why it is called as single column? Because there is only one amount column. That's why it is called as single column cash book. Another type of cash book is double column cash book. In addition to that amount column, or it is represented as a cash column, in the double column, we record the discount allow and discount receive column. See, discount or cash discount is an incentive given to the customer to pay before the due dates or specific date. This practice encourages the early payment, and when given to the customer, it is loss. And when received from the supplier, it is gain to the company. Since this discount arises only when the cash is received or paid. That's why it is recorded in the cash book. If discount is allowed, which is recorded on the debit side, and discount received, we record on the credit side of the cash book. Discount column are total and not balance. Remember, discount column are total but not balance. This is a double column cash book. The next cash book is 3-column cash book. In 3-column cash book, there are 3 columns. Discount allowed, cash and bank. On debit side as well as on credit side, discount received, cash and bank. That's why it is called as triple column cash book. As we have seen that cash book is single column, double column and triple column. What is the main speciality of triple column or 3-column cash book is, in 3-column cash book we record the contra entry. Okay, we record the contra entry in 3-column cash book. Remember, contra means what? Other side. If we record both debit and credit aspect of the transactions in cash book, it is called as contra entry. There are only such transactions in which we record the contra entry. First transaction is payment of cash or check into the bank. That is first transaction in which we record the contra entry, or that transactions we record debit side as well as credit side. And second transaction is withdrawal of cash from the bank for office use. Withdrawal of cash from bank for office use. These two transactions we make the contra entry. See, in the payment of cash or check into the bank, in these transactions two accounts are involved, cash account and bank account. As payment of cash or check into the bank means cash is going out of the business. That's why we record the cash column. We record the bank column is debited with the amount to cash account, and cash column is credited with the amount to bank account by bank account. Okay. Then in withdrawal of cash from bank for office use, in this case, cash column is debited with the amount to bank account, and the bank column is credited with the amount as a by cash account. Okay, that is main speciality of 3-column cash book. In this 3-column cash book, we will record the contra entry. Contra means other sides. There are only 2 such transactions in which we require the contra entry. That is payment of cash or check into the bank, and next transaction is withdrawal of cash from bank for office use. Now another type of cash book is petty cash book. See, petty cash book, in any organization, large number of transactions are of small amounts. For example, they have to pay the convenience charges, that is bus, taxi, cartage, postage, telegram. All these are miscellaneous expenses are made, and they are repetitive in nature. These are generally repetitive in nature. That's why all these payments are handled by the cashiers. Separate cashier is appointed for this recording of this type of transactions. That cashier is known as petty cashier, and the book in which that transactions are recorded are called as petty cash book. Petty cash book is work on the impress system. Impress system means, for example, there is some amount is fixed, that is 1000 rupees is given to the petty cashier. From that 1000, the cashier has to do all these expenses, that is conveyance, that is bus, taxi, cartage, postage, telegram. All these transactions they have to make from that 1000, and at the end of that specific period, for example after 1 month or 1 week, main cashier will again give the amount or petty cash to the petty cashiers. That's why it is an impress system. It is work on the impress system. That money is called as impressed money, and petty cashier record all these petty expenses in the petty cash book. Okay. What are the main advantage of petty cash book? See, if this repetitive nature of the transactions are recorded by the main cashier, then it will be time consuming. That's why it save the time of cheap cashiers. Then also saving of labor in posting, control overall mistakes, control over PT expenses, control over frauds, benefits of specialization. It is a simple method and convenient handling of the cash book. You can see here in PT cash book there are two parts, that is receipt and payment. On receipt side, the PT main cashier give the cash to the PT cashier, that is recorded on the receipt side, and all the expenses are recorded on the credit side in the respective column, that is postage, telegram, television, staff welfare, cartage, stationery and miscellaneous. Okay, these are all about the PT cash book. Now we are going to see what are the main advantage of PT cash book. PT cash book or overall cash book. What is the main advantage? See, if we record the cash transactions in a separate cash book, then we can know easily the closing cash balance with the organization. Also, there is no need to record the cash, prepare the cash account in the ledger, because this serve as a purpose of cash book journal as well as ledger. Also we can control the cash expenditure because we are recording separately, so that we can easily identify what are the highest expenditure item in the expenditure pattern. That's why we can easily control the cash. Also it is helps to verify the transactions and also helps in taking the important business decisions. Okay, these are the main advantage of the maintaining the separate cash book for recording the cash transactions. Thank you.